Hello and welcome. You're tuned into CNBC-TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Manisha and with me is Nigel D'Souza, back with your daily dose of commodities, cryptos and currencies.
Well, we have quite a couple of guests and we'll get to that in just a bit. But for the time being, let's do a quick check on what the global equity markets are doing. Wall Street, well, it shut shop in the red, marking the first session of the last 7 when the S&P 500 did not close at all-time highs. The US lack of progress, with regard to the talks with China, that's what weighed on stocks. And the prospects of an extension on the pause on higher China tariffs remain uncertain. Meanwhile, all eyes will be on the US Federal Reserve meeting outcome. Expectations largely are tilting towards the central bank holding rates steady in that vicinity of around 4.25% to around 4.5% range. Investors are also watching out for earnings that are likely to come out in the next couple of sessions. Meta, you have Microsoft as well as Ford. They'll be reporting numbers. We'll also have a lot of economic data that will be due. So the street will be trying to come to terms with how the U.S. economy is shaping up. There are signs of mixed trade across Asia Pacific as well. The U.S.-China talks in Sweden entered without a tariff truce extension Tuesday, a state made. Now, the postponement of higher duties won't be final until U.S. President Donald Trump signs off on the plan. The U.S. negotiators did say.
Oh, well, absolutely. All eyes on US Fed and the kind of tariff agreement conversations that seem to be going across the globe. But I want to shift focus to the crude oil prices now, and we've seen prices rally by nearly 3% in the overnight markets. So much so that we are holding around that $72.5 per barrel for the Brent prices, and that one is the 5-week highs on your screens. When you look at the price trajectory, well, we are up by 6% in the last 1 week itself, and it's at 8% of a gain that the crude oil prices are putting in for the month of July. Well, the moves follow as Trump ramps up pressure on Russia over its war in Ukraine. Meanwhile, the U.S. Treasury Secretary Scott Bessent also said that he has told Chinese officials that given U.S. secondary tariff legislation on sanctioned Russian oil, China could also face higher tariffs if Beijing continues to buy Russian oil purchases. In the meanwhile, you have the dollar index, which is scaling a 1-month highs versus the euro and on the wake of string of trade agreements between the U.S. and its trading partners. While the markets remain hawk-eyed on the key outcomes from the central banks, namely the U.S. Fed, which is today, and the Bank of Japan monetary policy meeting, which is on Thursday. The participants are now expecting the next leg of dollar move to come in from the monetary policy rather than trade uncertainty. So that is what really defines the rest of the week right now. But with that, the U.S. Fed Reserve's 2-day meeting ends today, and the chairman, Jerome Powell, will announce their decision later tonight. CNBC's Steve Leisman joins us with the key expectations that can come in today.
En route to an expected September rate cut, and respondents to the CNBC Fed survey seeing a 3-way tie in the race to replace Fed Chair Jay Powell. Here are the Fed expectations. 100% say no cut in July, but 27% think the Fed should cut. That reflects some agreement with the two Fed governors who many think might dissent at this meeting. 65% expecting the cut in September. The chance of recession falling to 31% from 38% in June and 53% in May, amid more clarity on the tariff impact, along with somewhat better GDP, now at 1.4%, up from 0.8% from the May low. Take a look now, the current rate outlook from the Fed, from respondents. 4.4 is the current, goes down by about 2 rate cuts in, this year, 2 more next year, showing the Fed is still remaining above the neutral 3.3% rate, even with a new Fed chair. But who that next Fed chair will be, well, that's anyone's guess. We have pretty much a 3-way tie here. Kevin Warsh at 24%, Treasury Secretary Scott Bessent at 24%, Hassett at 22%, and then Fed Governor Waller at 14%. Bessent has said the president could pick a new Fed chair as soon as December. That would be just a couple months earlier than either former Fed chairs Bernanke or Yellen were nominated. The Powell's tenure or term ends in May.
We'll wait to hear from the Fed, but for the time being, let's get in Jonathan Barratt, CIO ETO Markets, who joins us to talk commodities. Hi, Jonathan. Good to have you on the show as always. Well, we'll wait for the Fed. But in the near term, what's encouraging is the way steel prices have recovered. Chinese steel prices are showing some kind of recovery. I'll tell you what's the good part, that, we are seeing lack of production or lower production in China. The problem is, because of that, iron ore prices are crashing. How do you see this panning out, and where are steel prices headed?
Right. Yes. Good afternoon. Good to be with you. Oh, look, I generally think when you look at the steel prices, this is something that happens every year in China. Obviously, as we come into summer, there's that effect where we have issues with air quality, and as a result of that, production starts to slow down. With that, we naturally see an adjustment there in iron ore prices. So, but furthermore, when we look at also some of the economics that are coming out of China, they're still waiting for some form of stimulus, more stimulus, which is needed. If you look at industrial profits that came out just last year, they were down and they continue to trend down. So there is still this concern that the Chinese economy is not producing what it should do or what the market wants it to do. So when I look at steel prices going into the next couple of trading sessions, I still feel that it's going to be quite weak. And I still feel that prices will be weak, especially when we don't see any outcome in terms of the tariffs. That is a prolonged thing which is hanging over the market and something that will cause disruptions in the market.
Jonathan, I want to take a step back and come to gold rather, because when you look at the month of May, June and July, it has been a consolidation for the gold prices. Interestingly, we've held above $3,300 an ounce. Now with the US Fed meeting and the tone expected to be dovish today in the evening is what we seem to be hearing from everywhere, and a bit of a gain in gold prices. One, how would you look at gold in light of the US Fed meeting tonight? Are you expecting prices to gain up from here? And what is your range now standing at?
Look, I think gold is really interesting. We've come from that high at 34.25 just last week. We've come down. We're now at around and bounced off 3,300. I do like that as a significant hold. The dovish comments, which we expect out of the Fed, I think will be there. I think the market is still looking at a rate cut in September. And I'm quite interested to see the data between here and September as to whether or not we will actually see that rate cut. But when I look at the price of gold, we have gone through that consolidation. I would like to see one more dip. When I do look at the technicals, we are at a very, very important level, a trend support, which has been here for quite some time, probably about 12 to 18 months. So if it does break through that 3,300, prices will go lower, consolidate back to 3,250. But if we hold, we head back to that 3,400. So in my mind, I'd like to see it continue to trend higher. That's the call I've had for some time, and hopefully it'll happen.
All right.
Just one thing, Nigel, as he said, because 3,300, if that breaks, can take it to 3,200. And then you see it as a buying opportunity, Jonathan, for what kind of targets?
Oh, look, I generally think that we do see that as a buying opportunity. Remember, I'm also still feeling that the US dollar will remain quite weak over time, and I think that'll get that benefit. Also, you might see a reprieve in the price of gold sort of going low once we get tariffs and things out of the way. But remember, tariffs are not positive. So there might be a reprieve in terms of the higher prices we've seen, but when prices come down, people will start to realise tariffs are an issue. It's something that is not reflected poorly. So I think I'll see that people rotate back out of equities and actually into gold.
You said you're expecting the dollar index to soften a little bit. Where is that headed? When Trump came in, everyone was talking about making America great again. Yeah, the dollar index that went dancing away to 111. And from there, slam dunk at around 98.
Well, look, I generally think with the dollar index, I think that continues to come under pressure. I really think that in order to make America great, you need to stimulate the export side of it. And to stimulate the export side of it, you need the dollar to come under pressure. So I think that's a policy which is underground, but I generally feel that US dollar continues to weaken. Back to the 95 as the index or even lower, that puts the US export market in a good position to really respond and also make America great again is what Trump wants. So generally say that dollar to remain weak.
95 on dollar index is what you can look forward to then. I also want to talk about silver now, because as we look at the industrial demand going forward, and as you mentioned various points when Nigel talked to you about steel. Would the same work for many of these and other base metals as well when you look at a copper or a silver for that matter? What fundamentals would you want to watch out for? Would that come in from tariffs? Would that come in from China, where we've seen various kind of statements as well come in? Interestingly, Nigel, what the Chinese premier said yesterday, he actually criticized and scolded various local governments, saying that there's too much focus on AI and EV and computing and not so much on infrastructure and construction and real estate and housing. I mean, Jonathan, how are you reading, one, that statement, and two, what's your sense on many of these metals now?
Okay. I think when you really look at China, that stimulus is required, and that stimulus will certainly help with the price of a lot of our base metals. Copper in itself has been at these highs. It has just come off from that $5 a pound, and we're sort of feeling it will hit down to that $5 a pound. At the moment, the question about the 50% tariffs on copper is an issue that the market really, I feel, hasn't been decided about how it will affect the pricing. I do feel at the end of the day in China, if we don't get those economics coming through, then I think you'll find base metal prices to come lower. As I mentioned with copper, which we know is the litmus test for the economies, the global economies, I think that has just come off, or just has come off from some highs, and I do feel that's to consolidate. I would like to see the market reflect how the tariffs will reflect on demand, and I think they'll see that in a negative way. So I am looking for copper to come back from these levels, probably 5 to 15, maybe even 20%.
Wow, 5 to 15 to 20% of a decline in copper prices. Would you want to give a timeline to this?
Look, really, it's one of those funny things where we see it at these record highs, and we see a lot of the base metals here. The market is really undecided as to what the tariffs actually mean. Casebook economics suggests they're negative. But then when you add the fact that the Chinese economy is not performing as much as it should be, we've seen data and more data, and it requires more stimulus. You combine the two together, there'll be a little bit of euphoria around tariffs and the trade deal, but essentially at the end of the day, they are negative. And I think that it will reflect in lower prices for a lot of these base metals.
What about aluminium? Constellium came out with a set of numbers overnight. The stock went up 5%. So it seems the street liked what they said, though I don't think they tinkered with their guidance too much. What's your view on aluminium then?
Well, it's a similar thing. I mean, look, what we're seeing is, what I feel we're seeing is a little bit of exuberance coming in. A trade deal, the market buys a trade deal, but the trade deal essentially is negative. You can't sort of argue the fact that a 50% increase in the price has got to be good for the consumers, because it's not. And it's negative for a lot of economies. So this is an added cost, but the market feels that exuberant when a deal is done. When Trump comes on the line and says, I've done the biggest deal in the world type of thing. So I really get this sense that we're seeing exuberance in the markets, but when reality comes, it'll come in the economic numbers down the track. So Manish, to your timeline, this is probably something that we're looking over a 6 to 8 month period. The Fed hasn't moved on interest rates. They're also waiting and see. So I do get a sense that time will tell. Tariffs are negative, and that will reflect in commodity prices, especially base metal prices, coming from these heights, off from these heights.
Well, that point is well taken. Jonathan, also, how would you look at silver prices? Because once we crossed that 37 and 38 and perhaps 39, markets started to believe that 40 is not too far away. And if that crosses, you could be looking at mid-40s as well. We haven't seen that happen. How would you look at the scenario?
Yeah, look, I think, once again, it's silver is something we've been looking at for, I think, quite a few years. We like silver. It's sort of one thing that it's a precious metal, and it's also an industrial metal. If we're moving into that green space, this is a metal that's required. When I do look at it, gold's reached record highs, silver has not. Remember, we got to get up to $50 an ounce. So in my mind, we're not that far off it from here. So I think dips on silver will be looked at. But remember, at the moment, things are super volatile because we don't know what President Trump will say on a turn. But at the end of the day, I think silver is something that just happy to be long.
I hope he knows what he's going to say next, Jonathan. But the other focal point will be tonight, the Federal Reserve. Well, let's see what they have to say. there's virtually no chance of them cutting rates. How do you think Fed goes about their business? Mr. Trump wants not 100, not a 200, maybe a 500 basis points cut. But the Powell has said that he's in no hurry to cut. Though the street, I think, is factoring in 2 cuts in September and then maybe in December. Are you in that camp?
No, I'm not. I'm thinking I'm in the Powell camp, and I'll wait and see. But I would be surprised if we get 2 this year. I think 1 would be there. But once again, we've got to get over this euphoria about a trade deal. They're not trade deals. They're actually they're deals that will retard economies. So I think the Reserve, the Fed, will hold off because I think you'll see the economies sort of come under pressure, and they'll need this fuel to regain the economies once we get some realistic attitudes towards pricing.
Jonathan, how would you also look at various other currencies, really? If you're looking at dollar index declining from here, as you said, 95, how would you look at a euro and a Japanese yen and an Australian dollar? Because we've seen some gains in the first half of this year. Would you say that much of that is baked in? Are you looking at further gains there?
Look, you have to take that by currency because remember, we take the US dollar on one side and then we'll look at the domestics in terms of the yen, obviously, because the yen, their energy needs are certainly there at about 100%. So when you take that, you look at the domestic side of it. I think the yen is out there in terms of trying to firm. I think it will. I am still bullish on the Aussie dollar and have been bullish the Aussie for some time, although it's been a very tough trade because it only just goes up gradually. But on the Aussie, I still like it. I think from these areas down here, we can get up to US 70 cents. It's currently at 65. So that falls into line with my weaker dollar. And I think the weaker dollar trend that I'm looking to will add fire to these trades.
Jonathan, how are you looking at the crude oil prices then? Because that clearly has been the major mover in the last few sessions now. 72 holding, conversations about 75 not too far away. But are you a believer that we can see prices higher from here?
Yes, I am.
Okay.
I think that given where we sit with Russia, I think given where we sit with China, we are not making trade deals. So I think that's a problem. I think in the short term, whilst we have this concern and that Russia is not performing, China is not performing, there's uncertainty in the market, and I think that will see prices for crude continue to rise. I do get a sense that when I look at the Brent contract, that we can get it higher and possibly even target that US 80. One important fact I do feel is that Trump is so positive on energy prices and oil that he will do anything to try and help the oil producers in the States. Remember, the price of oil, the base rate where costs are covered in the Permian Basin is at $64 on the WTI. That's where we are now. I think Trump will want to see these prices higher, so it might be engineered to help those oil producers in the States. And if prices go higher, it'll only go to the bottom line and increase the US efficiency on the oil production.
Well, there are 2 things that we've been saying constantly, Nigel. One is make America great again, and then the second one is drill, baby, drill.
Yeah.
What is that?
Drilling.
Drilling. You're drilling.
Drilling. And the reason that I know I track it closely is because there are a lot of pipe makers. The Welspun Group has 30%, 25 to 30% of the market in terms of those pipes, because transportation is going to be important. Once you drill, then you're required to transport it. So that's that's virtually been absent for 18 to 20 months. And now all of a sudden, I think in the last 7-8 months or so, they've released orders of more than a couple of $1 billion. So, drill, baby, drill.
Make America great again.
And they can make it profitable.
Good one, that, Jonathan. But thank you so much for joining in today with your sense on all of those commodities, currencies, and of course on what's impacting the international markets as well. With that, it's time for a short breather on the show. On the other side, we'll put focus on the edible oil space. Interesting conversation from the IVPA Global Roundtable Conference lined up on the other side. Stay tuned. Welcome back, and let's put the focus now on the Asian edible oil economy. From the sidelines of the IVPA Global Roundtable Conference in the national capital, I had the opportunity to speak with one of the Asia's key edible oil manufacturer, SD Guthrie, Managing Director Asani Malamput. He shares with us the road ahead for Thailand's palm oil exports to India and, of course, the whole biofuel mandate as well. Let's hear it.
This year, there is some changes. Thailand has reduced the biodiesel from B7 to B5, and that is giving us about 200 extra 200,000 metric ton available for export, and that is totally different from others that they're doing. Right? We think it makes sense because the price is high, and you should not burn the oil, put into that, right? So that's why I think. Also, we have a bit of extra this year. Production is getting better. So all in all, we expect about 3.4 million, 3.5 million metric ton available. Out of that, about 1.1, 1.2 million will be export. And, the destination is India. Yeah, 90%, 95, 96% of our product, our CPO go to India, because of bilateral trade as well. Sure. And India is a big market.
Sani, a lot seems to be happening in South Asia as we look at that. And with Thailand really, climbing up those ranks or trying to, what else is happening within the region that changes it for you?
If you ask me, that's a very good question, right? I think what happened is that you can see Indonesia now increasing biodiesel from B40 to B50, right? Well, the oil will be less for the market, right? And that's helping us. Yeah. Malaysia, we have a struggling a bit about on the production. If you can see the number of production is stagnant. Yeah, basically it's stagnant. So the world still growing, population still growing. Thailand is the option that help us to do more. Yeah.
The concern, though, is the stagnating production of palm in most of the growing areas, whether it's Indonesia or Malaysia, or I'm assuming Thailand as well. Do you see that as a concern going forward?
Thailand is lucky. We are a low-risk country, according to EUDR, because most of our plantation is converted from rubber, either rubber or coconut, into palm. So that way, we are not having any new area or deforestation. So Thailand is like that. So we don't see any issue with that. I think there's actually it's an opportunity for Thai people. Now they're looking how we can export, not to India, maybe to Europe as well, because of EUDR make it a lot easier. Yeah? You don't have to be RSPO certified. You can still export if you have all the document ready, right? So yeah, that's opportunity for Thai.
What more opportunity do you see for Thailand going from here, whether it's about production, refining, exports, and also how are you looking at the prices from here on?
Thailand production growth is about 3.5% every year to 4%. It's growing still. And then the three usage, right? One is for own consumption, one is the biodiesel, and one is export, the rest, right? So I don't think the consumption in the country will be increasing because the population is not increasing. The second one is biodiesel. They already said that B5 is the maximum they want to go at this hour, at this price. So they will not increase. So that's where there will be a lot of opportunity out of Thailand. Now we sell to India. If we have more, we can sell to other countries as well. But India is a good market for us anyway, right? I think because look at the geographic. It come from the Phuket port, right? It's going to India. It's a charter, and now they're building up a tank farm, short tank there. So it's even easier for us to do more out of Thailand. For the price, it is really bullish now. I can see that from last few months, it's stagnant at about 3,800 ringgit, and now it's going to 4,300 already, right? It could be more because of the from the Indonesian starting to use. US also starting to use a lot of soy. And then the crushing now about to stop, because they have so much of the meals, they don't know what to do with it, right? So that will also forbidden US from crushing more. So yeah, so if oil less, people still use it, the price should go up.
And how would you look at the competition from these other countries? I mean, in sense of pricing within Thailand as well?
Thailand is a small player in the market. Yeah, I think we have big brother Malaysia, we have Indonesia who are doing big things. Thailand is an alternative, for the other countries. If something happened, like a few years back when Indonesia said, I don't want to export anymore, right? Where are you going to get the oil, right? So we are here.
But is it price competitive? Is it compatible?
Yes.
It is.
In the last, you can see, I did show in my presentation that the price has been about the same, except for the last end of last year, where the government didn't control the export, so they export a lot more, and then that's why the stock in the country went down, and then the local price went up. Then you cannot export. But so far, I think they handled it well. I think more oil to come. I can see from the end of this year, even now, year on year, we are already 78% of last year export. Yeah, just half 7 months, we already 80%, almost 80%. So I'm sure that there are going to be more opportunity for Thai.
I'll wind this down with one final question, Asani. So what is India as an overall percentage market for you? Where do you see it going, let's say, next couple of years?
India's #1 market for Thailand is out of all the export, 95% go to India. Okay. That export also about 1/3 of our production. So 33% of our production go to India, maybe 30%, let's say. Right? So India is a big player. It's a big to us. And then in the future, and now you can see, right? Thailand become #3 exporting. Yeah.
Exports.
So import for India. India import #1 from Malaysia, from Indonesia. Thailand #3 now, and it's growing from 7%, 8% last few years back. Now it's 11%. This year could be 14%. I can see that. So we are one of the major player for import oil from India. Right?
All right. On that note, though, we'll wrap up on this edition of The Big C. Thanks a lot for watching.